I think you make an excellent point. I mean, really, in some ways, this correction started a year ago in January. We had a 10% correction, and then we had another one, in September, and then finally a kind of a capitulation one in December. So in some regards, we might have been through some of the necessary retest, if you will. I'm not convinced we will get one. The only reason is that there's strong historical precedent, Melissa, when you have a collapse of the magnitude and speed by which we had in December, you generally go back at least at some degree to test the temperature of sentiment and buying power that or lack thereof that it'll exist. I'm getting less convinced we go all the way down to those lows, but I think we're going to hit some period maybe with the news flow that's just enough to scare people again, to check some of the optimism that's starting to emerge and to bring back sort of the bearish chatter, if you will. I think we're going to survive it and move on higher this year, but I still wonder if there's an opportunity maybe to commit some cash again on some panicky pullback days.
How do you feel about the markets going into earnings? And I'm going to point to a couple of data points which seem to play into the bullish case, Jim, and that is when you take a look at Taiwan Semi's earnings warning, stocks are, in that complex are not selling off, continuing to sell off on that same news, which is what we saw for a period of time since, all of those semi manufacturers started pre-announcing starting last fall and continuing all the way until Apple's pre-announcement in January, and also Morgan Stanley. Morgan Stanley isn't the reason why people are taking profits in the bank sector after what had been a strong week for them.
Yeah, I think, Melissa, I expect that the data, economic reports, earnings reports, CEO forecast, are all going to, analyst downward revisions are all going to be bad here as we go through this year for the most part. The markets that collapsed here in the latter part of last year are telling you that, not just stocks, but commodities collapsing, bond spreads blowing out. We're going to have a fairly significant slowdown in the economy and earnings and attitudes and everything. So I fully believe that's going to be the case. The challenge last year was to stay appropriately cautious in the face of chronic good news. And the challenge this year, I think, or maybe what you'll need for investment success, is to remain fairly bullish in the face of a stream of bad news. And the difference really is that, yeah, we went from overheat a year ago to underheat, and at full employment, underheat is a lot better situation.
You said you see a dramatically slowing economy in terms of earnings and sentiment. Do you see it in terms of the ultimate GDP number, and how much of that slowing, if it does materialize, is traceable back to the government shutdown, if any?
Yeah, I think at this point, the government slowdown is not a huge event. If it drags on here through quarter end, I think it does start to have some meaningful impact, not only directly, but also sentiment-wise. I don't know. I've looked at the things that direct impact might be 0.25% or something in that ballpark. But, Tyler, I think we're slowing to sub 2% growth this year, maybe, or at 2%. And so if it really dragged on, through much of this year or something, that'd be a very serious event. But I think politically, once it really starts to show itself, I think both sides will have to find some way to move on. So I'm not betting a lot of the investment strategy on the government shutdown.